Here's something strange. Right now, sitting in government accounts, there's money with your name on it. Not a scam, not a maybe. Actual money, already approved, already budgeted, and a huge number of Canadian seniors are about to let it pass them by. Not because they don't qualify, because nobody ever sat them down and explained it in plain English. So that's what I'm doing today. 3 things are changing for Canadian seniors this July. One shows up in your account without you lifting a finger. One is a real raise, a 25% jump, on a payment a lot of you already get. And the third could wipe out one of the most dreaded bills in retirement, the dentist. Stick around, because by the end you'll see these 3 aren't random. They're connected by one small piece of paper. Miss that piece of paper and 2 of the 3 vanish. File it and all 3 land in your lap. Let's get into it. The one that needs 0 effort, start with the easy one. Old Age Security, OAS. Most people think OAS updates once a year. It doesn't. It's reviewed 4 times a year, January, April, July, October, tied to the cost of living. When prices go up, the law says your OAS has to follow. This quarter, that means another 1.2% bump. Doesn't sound huge on its own. But here's the part people miss. It's not a flat bonus, it's compounding. Every increase stacks on the last one. Over the past year alone, OAS has climbed more than 2%, and it just keeps climbing quarter after quarter for the rest of your life. In real numbers, seniors 65 to 74 are now looking at roughly $752 a month. 75 and older, about $827, and you do nothing. No form, no call, no application. If you're already getting OAS, the new number just appears in your July deposit. 2 quieter things ride along with this same adjustment. If you're on the Guaranteed Income Supplement 2, that gets recalculated every July based on last year's tax return. And for most modest income seniors, that means it holds steady or ticks up. And if you've ever worried about the OAS clawback kicking in once you earn a bit more, relax. The income threshold where that clawback starts also rises with inflation every year. The bar moves up right along with your income, so this raise is one you actually get to keep. That's one down. Free money, no action required. But the next 2, they're just as real, except they come with a catch. Hold that thought. The 25% raise hiding in a name change. If you've ever gotten the GST/HST credit, that quarterly deposit, pay attention because it's being rebuilt from the ground up. Starting this July, the old GST/HST credit is being replaced by something called the Canada Groceries and Essentials benefit. Same purpose, help with the cost of living, but the amounts aren't just shifting sideways. They're jumping 25%, with more increases already scheduled through the end of the decade. Let's put actual dollars on it. A single senior used to top out around $533 a year. Now the ceiling is $679. A senior couple used to max out near $698. Now it's up to $890. That's not pocket change. That's over $100 extra a year for people who were already receiving the old credit just because the program got rebuilt in your favor. There was even a one-time top-up sent out in early June to bridge the gap. Roughly half a year's credit dropped in early as a bonus. 2 questions you're probably asking right now. Do you need to reapply because the name changed? No. If you were getting the GST credit, you roll straight into the new benefit automatically at the new higher rate. Who qualifies? Low and modest income seniors, which covers a huge share of people living mainly on OAS, GIS, and a modest pension. It phases out gradually as income rises, and it still lands the same way it always did. Tax-free 4 times a year, same account. Picture a retired couple who used to see about $700 a year from this credit. Now they're closer to $900, almost $200 more, for changing absolutely nothing on their end. Except one thing, and this is the catch I mentioned. This new, more generous benefit is calculated entirely off your 2025 tax return. No return filed means no income on record, which means no calculation and no payment, no matter how much you'd actually qualify for. File your return, and the money flows automatically. Skip it, and the most generous version of this benefit in years quietly passes you by. Keep that in mind. It matters even more for what's coming next. The one that could save you thousands of the 3, this is the one I'd call the big one. Because for a lot of seniors, it's the bill they've been dreading for years, the dentist. For a long time, the Canadian Dental Care Plan only covered certain age groups rolled out piece by piece. That's over. For the 2026 to 2027 coverage year, it's open to every eligible senior, full stop. The rules are simpler than people expect. If your adjusted family net income is under $90,000 a year and you don't already have private dental insurance, you can be covered. How much depends on where you fall. Under $70,000 in family income, and the plan covers 100% of the agreed dental fees. Between $70,000 and $80,000, it's 60%. Between $80,000 and $90,000, it's 40%. And this isn't vague coverage. We're talking real, everyday dental work. exams, x-rays, cleanings, fillings, extractions, root canals, and the big one for a lot of seniors, dentures, full or partial. A full set of dentures alone can easily run over $1,000. If you're under that $70,000 threshold, the plan covers the agreed fee in full. One honest caveat: the plan pays based on a set fee guide, so depending on what your dentist actually charges, there can occasionally be a small gap you cover yourself. But for the people this program is built for, it turns a bill that used to be terrifying into something manageable, sometimes nothing at all. Applying is straightforward. Go through canada.ca or call Service Canada. If you qualify, they send a welcome package and a coverage card you bring to your dentist. The application window for this year opened at the start of June. It's open right now. And there's that same requirement again. To be approved, you need your 2025 tax return on file. That's how they confirm your income actually falls under the limit. The thread connecting all three. So here's the pattern. Two of these three, the bigger grocery style benefit and the dental coverage, both hinge on one single thing: whether you filed your 2025 tax return. That one form is the master key. It's the difference between money quietly landing in your account and a covered trip to the dentist, or both of those doors staying shut. And every year, seniors who fully qualify miss out on both. Not because they earned too much, not because they were rejected, but simply because they never filed. Often because their income was so low, they assumed there was no point. If that's you or someone in your life, hear this clearly. Filing isn't about what you owe. It's the doorway the money comes through. No return, no doorway. One more place to check before the checklist, one bonus tip, because it's the same kind of overlooked money. Beyond these federal programs, most provinces run their own senior credits, property tax and energy relief in particular, that go badly underclaimed. Ontario has a senior homeowner's property tax grant worth up to $500, plus an energy and property tax credit covering both rent and energy costs. British Columbia lets eligible seniors defer their property taxes entirely. Quebec runs its own senior assistance and home support credits. Manitoba and others have their own property and school tax rebates. Every province is different, which is exactly why this money slips through the cracks. There's no single national letter that tells you about your province's version. So do one simple thing. Search your province's name plus senior property tax credit, or call your provincial seniors information line. There's a good chance there's a few $100 more sitting there that nobody ever mailed you a reminder about. Why you're hearing this from me, and not a letter fair question to ask. If this is all good news, money that was deliberately set aside for seniors, why isn't it showing up as a clear letter in your mailbox? Because it's nobody's specific job to chase you down and make sure you claim it. A change gets announced once, buried in budget language, and then everyone moves on to the next thing. Your dentist isn't going to mention that a federal plan might cover the work. That's not his role. Your bank isn't going to flag that your benefit payment went up. Every piece of this sits behind its own form, in its own department, and none of those departments talk to each other. It's not a conspiracy, it's just a system where a dozen offices operate independently, and the people who need this money most, the ones not combing through government press releases, are the ones most likely to miss it. Your checklist for this week. Here's exactly what to do, in order. 1. If you already receive OAS, no action needed, but check your July deposit and confirm the higher amount actually landed. Worth knowing what your number should be. 2. If you haven't filed your 2025 tax return, do it now. This is the single most important item on this list. File it even with low income, even if you owe nothing. It's the key that unlocks both the bigger benefit and the dental coverage. Free tax clinics exist across the country if cost is a concern. 3. Apply for the Canadian Dental Care Plan. The window is open right now. Once approved, book the work you've been putting off. 4. Search your own province's senior property tax and energy credits and claim what's yours. 4 moves. 3 of them put real money back in your pocket. None of this is luck, and none of it is charity. It was set aside for seniors like you on purpose. The only thing standing between you and it was knowing it existed. Now you know. If this saved you from missing even one of these, send it to a senior you know, a parent, a neighbor, a sibling, because right now someone you care about is about to leave one of these 3 on the table with no idea it was ever there.